What's up, everybody? Today I'm talking to you about 5 stocks that I realistically believe could double over the next 5 years. And it's important for you to know I'm just a person on the internet. I'm probably wrong, and none of this is a guarantee of anything. I'm not a financial advisor, and I'm not liable for any decision that you make. Those are your own decisions, and take accountability for your own decisions. With that being said, I do invest my own money. I share my portfolio, very transparent. We've got about $112,000 invested. We're getting crushed today, down $5,700 or 4.83% just today. And I share my portfolio right here all the time on this channel. So subscribe if you want to see those updates. And I'll tell you if I own the stocks I'm talking about today or not, or you can just look at my portfolio and see for yourself. All right, first up, we have Meta Platforms, the Facebook. It is currently trading at a blended PE of 13. I do own this stock. I think the sentiment around this stock is terrible. People hate advertising right now. People hate AR, VR. They hate Mark Zuckerberg. They hate just about everything to do with Meta. The fact of the matter is they have multiple apps that have multiple billions of people that use them, and there's not very many companies in the world that have that many users. I think that from just their advertising properties alone offer a decent buying point right now. When you add on the growth potential of AR, VR, and the metaverse and what they're doing, plus a rebound in advertising, I just think it's a great time to own Meta. It's my largest position right now. What you're looking at right here is a chart. Down at the bottom right here are the analyst expectations for earnings growth through 2024. And then I took basically the average for the next few years and put it down to 13%, which is about what analysts are expecting for some of these years. They don't really go out to 2028, so I just kind of kept it at 13%. With that, we can build a little forecast here and look at what different price to earnings multiples are based on these earnings growth rates. Again, we can see it's trading at a PE of 13 right now. If we go out to 2028 with these growth expectations and it trades at a PE of 15, which is lower than the average for the S&P 500, you get a 100% return by 2028 for 12% per year. Its normal PE over the last 5 years has been 26.8. This scenario that I just shared requires a PE of 15, which is significantly lower than its 5-year average PE. So I feel good about owning Meta right now. Taiwan Semiconductor. I also own this stock, as does my friend Warren Buffett, who it looks like bought it after me. Just saying. Warren, if you're watching this, make sure you like the video and subscribe to the channel. All right, so same deal. We've put in analyst expectations and then basically averaged out what the expectations are through 2027, 2028 for earnings growth. And again, going out to a PE of 15, which it currently trades at a PE of 13.6, you get a 120% return by 2028 for almost 14% annualized. If it trades at a PE of 18 at that time and gets these earnings numbers, you've got a total return of 161%. I don't think that's likely, but we don't need that to happen. If it trades down to a PE of 10, you still get a 60% total return for 8% annualized. I feel good about the margin of safety in Taiwan Semi right now, which is why I own the stock. Lowe's, everybody knows what Lowe's does. Their home improvement retail, 129 billion current market cap. Same dealio, we got the analyst expectations built in here for earnings growth. Currently trading at a blended PE of about 16. In 2029, if this thing trades at a PE of 15, based on these expectations, you get a total return of 121% for 13.4% or 13.7% annualized. If it trades down to a PE of 10.5, you still get that 60% total return. And if it somehow trades up to a PE of 18, at that time, you get 162% total return. If we want to look, its normal multiple over the last 5 years has been 19.46. Forgot to do the normal multiple with Taiwan Semi. Last 5 years, average price earnings multiple has been 22.4. So every single one of these so far, our scenarios are well below the 5-year average PE ratio for these stocks. All right, Rocket Lab, this is the riskier of the bunch, right? I own this company as well. It's a small cap company, or medium cap technically, $2 billion. Got a lot of risk associated with it, but I think a lot of upside. It's an unprofitable company because of where it's at in its growth stage. So I'm using price to sales. We can see it trades at a price to sales multiple of 9.7 right now. And with sales growth templated in the double digits, and I think these are actually being conservative. I put these in 2026 to 2028. I've actually got revenue slowing significantly. But even with that, if it trades at a price to sales multiple of 5, which is like a 50% reduction from today, you're looking at a 194% total return for 19% annualized. Even if it trades down to a price sales ratio of 2.5 in 2028, you've got a 47% annualized or 47% total return for 6.5% annualized. And I don't expect this to happen at all, but if it stayed at a price sales ratio of around 10 through 2028, or if their revenue growth is a lot higher, then something like this is possible. Unlikely, risky stock, not guaranteeing this happens. Don't blame me if you invest your money, it's your decision. 472% total rate of return for 33% annualized. Again, very unlikely scenario, but it's possible, and this stock has a lot of growth. All right, Workday. This is a employee resource platform. They do things like employee training. We're using sales for this one as well. We've got the analyst expectations for about 17% growth through 2025, and then 15% through 2029. Currently at a price sales ratio of 7, price sales ratio of 5 in 2029, you have a 70% total return for 9% annualized. If it trades at a price sales ratio of 6, which is down from today's, with 7.2, you've got your 104% return by 2029. And even if it trades down to a price sales ratio of 3, total return of 2%, not great, but hey, you're not losing money there other than potential opportunity costs, right? All this to show, I think these stocks in general, growth type stocks, have sold off so much that we have some great long-term opportunities, in my opinion. The average price sales ratio for Workday over the last 5 years has been 12.06. So again, in all of these scenarios, we are well below what the average has been, and I don't expect us to get back up to the average. All right, if you like this video, the best way you can support me, give it a thumbs up so other people can find it, subscribe to the channel, and check out some of the other videos on my channel where I share my portfolio and all that good stuff. If you got any stocks you want me to review, leave it in the comments. Thanks.